Hello friends, today we will discuss about intraday strategy, the powerful intraday strategy for Nifty futures. So before we begin, please subscribe to my YouTube channel, Equity Ideas, and please share this video if you like the videos. So this strategy is it can be useful for working professionals, for novice traders, students, housewives, businessmen, pro traders as well. And you can connect me through WhatsApp at 6362220873. Yeah, before we begin, this is a disclaimer, the standard disclaimer, which says this video is for educational purpose, and the past performance doesn't mean we will have a future results. Okay, coming to the trading plan. So for all the new traders who wants to do intraday training, uh, my first advice is to have a capital of 1.5 lakhs. Okay, so and the risk management is the risk management rule is to bet 1% on each trade. So what does it mean? The 1% of 1.5 lakhs is 1500 rupees. So if I win, if I lose, I will be losing only 1500 rupees of my overall capital. So for two trades, if I lose two trades continuously, so I'll be losing a maximum of 3000 rupees. Okay, so this is the risk trade. So always we have to give more focus on the risk and positional sizing than the strategy. So this is the 1% rule is a universal risk management strategy. Okay, so okay, the coming to the entry signal. So what we're going to do is we are going to open a Heikin-Ashi chart, Heikin-Ashi chart, the HA chart, and we are going to see uh, when the close crosses above the magic line. So let's call it as a magic line, the blue line, which you will come to see, which you will come to know in going forward. Uh, the the close should cross above the magic line, and the candle should be open low. That means there should not be a wick on the lower side of the candle. The lower shadow should not be there, and at the same time the RSI should be in the range of 40 and 70. Okay, and yeah, remember this chart is 15 minutes candle chart. Okay, 15 minutes candle chart is. And the same way, if the sell signal is generated when the close crosses below the magic line, and at the same time the candle, the crossing candle should have open is equal to high. That means there should not be any wick on the top side of the candle, and at the same time the RSI should be between 60 and 30. Okay, so all these signals has to be generated uh, in the Heikin-Ashi chart. Okay, so once the close of the candle is done, and you are going to see if is the candle closed above the um, magic line or below the magic line, if the candle is open high or open low, and if the RSI is 40 or 70, is in the range of 40 and 70 for buy signal, and 60 and 30 for sell signal. Once all things are met, for example, for a buy signal, the close should be above the should cross above the magic line, and at the same time the candle should have an open low, uh, and the RSI should be in between 40 and 70. Then our entry price, our entry would be on the very next candle at the open price. Whatever is the open price, you just buy it. Or if it is a sell signal, whatever is the open price of the next candle, you just sell it. Okay. So coming to the exit signal. So our entry price is open price of the next candle in the normal candlestick chart. Suppose let's take an example of the open price is about 10,000. The Nifty is at 10,000. Nifty future is at 10,000, and we are going to buy at 10,000 rupees. Okay, and the target would be 0.3% of the entry price. That would be around 10,030. So you have a 30 points target, whereas the stop loss would be 0.15% of the entry price. So that means your stop loss price would be 9985. So that means you are risking only 15 points, and you are going to target the trade for 30 points. So this is a 1:2 risk reward ratio. Okay, so going to the next slide. Okay, so this strategy, I hope you understood the strategy rules, and you understood um, the positional sizing, and you have understood the risk management, and you have understood the total capital required, the minimum capital required for to trade this strategy. Yeah, of course you can trade with the 60,000. You have a leverage from you will get the leverage from the broker, but I don't advise, because the moment you lose 1,500 rupees in one single trade, so if you have a 60,000, like it's about like you're risking about 5% or 6% of your total capital. So I don't advise you to go for 60 for this strategy when you have a capital of less than 1.5 lakhs. The minimum capital required is 1.5 lakhs. Okay, we'll see the December futures from the day one till the end, till the expiry. Okay. So usually whenever I have the trading signal generated, I have the chart. This is the left hand side is the chart you can find is the Heikin-Ashi chart, and if the trade is generated, I will have a right side also. I will have a normal candlestick chart. Okay. In this case, we uh, uh, we uh, we do not have any trade generated. Okay. So if you see here, the price is trading above the magic line. All of a sudden the price closes below, the close is here, the previous close is here, and close crossed below the magic line, but you can see the lower, sorry, upper shadow. That means it is not open high, and it is not matching our criteria. Okay, so I'm not going to trade this setup, and and the price trades below the magic line, and again it takes a U-turn, and then price close crosses above the magic line. Okay, but I don't have open low on this candle, so I have no trading signal. Okay, so coming to the 3rd December, the next day, I mean the next trading session, I have two trading signal generated. Okay, so you can see here the first trading signal generated at 11 o'clock. This is a signal generating candle. You have open high. The previous close is here, and close crossed below the magic line. So my entry is at 11:15 candle. So this is the candle. That means in our normal candlestick chart, this is where I am going to enter. Okay, this is where I'm going to enter the open price, so I'm going to sell it. So you can see here I'm going to sell it at 10,917.8. That's my entry price, that is a sell price, and I'm going to write the profit of 0.3%. The target price is 10,885.05. And on the same day the price crossed above on the magic line on this candle, that is at 115 candle. So the close is above the magic line, and the open is low. Okay, so I'm going to buy it on the very next candle. So this is 11:15 candle, so I'm going to enter at 11:30 candle. Okay, sorry, 1:30 candle. This is 11, so this is the open price of 1:30 candle, so this is where I'm going to enter. So that is around 10,904 is the entry price, and 10,923 is my target price. Okay, so on this day we made a profit of 52 points. Okay, so we had two trades on this day, and we made a profit of 52.2 points. Okay, so the coming to the third day, I mean the next day, next trading session, we had a trading signal at open itself. Like the open candle is the signal generating candle. The previous close was above the magic line, and now it is below the magic line. And so that means my entry candle is open of 9:30 candle. So this is the open of 9:30 candle. So here this is where I'm going to buy it, that is 10,884.75, and my exit is about, my target price is for 0.3% of the entry price, that is 10,901. Oops, sorry, I'm actually this is a sell signal, so I'm going to sell at this candle, and my target price is around somewhere here. But before going to my target price, it got hit, the stop loss got hit, so I'm out with the loss. Okay, so by 0.15%. So that means my entry price was, the sell price was 884, and my buy price, I mean the stop loss price was 901. It's about like 15 points approximately. And similarly on the we have a signal generated at 115 candle. You can see here 115 candle, this is a 115 candle, and this is for sell side, whereas 115 candle, yeah, okay, so this is where I shorted, but market hit my stop loss. So I had a two trading with the loss today. So I had two opportunities today, but both are loss. You can see here this day was a sideways market. So this day was a sideways market, so it was trading from around 875 to 930. It's like 50 points was a day range in the Nifty, so that means it's a sideways market. But as I am trading as per my system, so I have to trade, and I'm going a loss on today's video. Okay, today's day. So I lost about 32.76 points. That's about 2,457 rupees. So going into next slide, next trading session, um there was no signal here. That's okay. You can tell the close is below the magic line. No, you can see the previous close is already below the magic line. Okay, so that's why this is not a close crossed below. Okay, so there was no trading signal generated. So here you have a close above the magic line, but you can see the lower wick on this candle. Then you also have a close cross here. You can see the small wicks on there is no open high here. So there was no trading signal generated on this day, and you can see the price was on this day also we had a sideways market. Going to the next day, we have the two trading signals generated on this day, one at 9:15 candle, okay, and it was a short side, so you're going to short on open price of this candle, and you're going to write the profit, okay. And on the same time, we had another opportunity coming at 145. So you can see the open crossed below here and open equal to high, and so so I'm going to enter the price at 2 o'clock candle, like open price of 2 o'clock candle. So that's at around 10,663 is my entry price for a short side, and there was a profit on this trade as well. So today I made about 64 points overall profit. So that comes to around 4,800 rupees profit. Okay. So going to the next slide. Oh, on this day there were four trading signals generated. So you can see here one generated at 9:15 p.m. So and it got stop loss hit on buy side, and then at another one generated at 11:30. This is 11:30 candle. This also stop loss got hit, and next candle is around 1 o'clock candle. This is open high, close crossing below, but again the stop loss got hit. Okay, so the next trade was at 145 candle. This is open equal to low and close crossed above the blue line, the magic line. So now I'm able to enter at a 2 o'clock candle in the normal candlestick open price of 2 o'clock candle, and I'm going to write the uh, profit. So today I made four four trades. Okay, today I made four trades, but I'm in loss of only around 16 points with the four trades. Why? Though my trades were four, and though all the the three out of four, the three trades were in loss, but I made only 15 points loss because of the risk reward of 1 is to 2. So that's why I'm telling the risk reward is the most important thing in a trading strategy, and risk management and positional sizing is very important. Okay, so though I had made four trades today, I am with only minimum loss. Okay, on this day. Okay, so coming to the next slide, this is on 10th December. The trading signal got generated on 9:15 candle. So our entry is on 9:30 candle open price of 90 candle. So I shorted the market. Um, I was able to make around 30 points profit. And next is 115 candle. The 115 candle is on short side. Uh, sorry, 145 candle on short side. So this candle is open high, and so I'm going to short at the next candle, open price of next candle. So I was able to make profit um, around 30 points. So on this day we traded two trades, and we made about 63 points profit. Okay, now coming to the next day's next session, next trading session. So only one trading signal generated. The two that is at 11 o'clock candle. You can see open is equal to low. There is no lower shadow, and the close crossed above the magic line. Um, so I can write this. I can take this trade at a very next candle. This is my entry candle. So entry price, that is 10,482, and that is my exit point at 10,514, about 30 points, 31 points. So that's about 31 one trade, and I was able to make around 2,300 rupees. So going to the next session. Sorry. Okay, this is 11th day, and this is 12th December. We had the buy triggered at this point, and I made a trade. Okay, there is one more trade here. You can see here the open high and close crossing below the magic line, but I'm not going to trade this. You know why? We have a rule on RSI, which says for the sell signal the maximum RSI is 60. Okay, but our candle is above, our RSI is above 60. That means it's uptrend. So do we want to short this market in the uptrend? No, right? So that's why the RSI rule is for not to go against the trend. So it helps us to not to go against the trends most of the times, but not every time. Okay, so at least we can avoid the wrong trades. So we have only one trading signal generated on this day, and we made a profit of 32 points. So going to the next day. On this day, we had only one trading session at 2:15. You can see here, where is it? 2:15. Yeah, okay, so 2:15. This is the candle we entered. I mean, the alert was generated. So our entry was here on short side, but our stop loss got hit. Okay, there's one more trade signal here, but it's not a trade signal. You know why? We are trading against a trend. So you can see here the RSI is above the 60. So that's why the RSI rule. Okay, we are not going to trade against a trend. Okay. Next is the next day. On this day, we had two trading signals. One at 9:45 on the upper side. Uh, uh, so it's a open low and close crossed above the magic line, but it got our stop loss hit. And at the same time, on the same day, on the same day, we have the trading signal generated at 145 is a open high candle, and close crossing below the magic line. This also we got hit by stop loss. Our price got hit on the stop loss, so we were in loss of 32 points on this day. Okay, so okay, so coming to the next trading session, it's there was no trading signal generated here. You can see here, there was one trading signal generated, that is at open low, and close crossing above the magic line, and we were able to write the profit. So the trading sorry, this is the candle. Okay, the this is the candle, the close crossed above the magic line, and I'm going to buy on the next candle, like 215 candle open price. So this is the 215 candle open price. I'm going to buy here. I'm going to write the profit. So today I had only one trade, and I made about 32.65 points. Okay. Going to the next trading session. On this day, at the opening itself, we had a trading alert. You can see here, the open equal to high and the close crossed below the magic line. But the thing is, it got hit on our SL stop loss, so we were out with around 16 points loss. Okay, so coming to the next trading session is on the 19th of the December. So we were able to, I mean, the trading signal generated at 11:45 on the buy side. So we are going to enter at 12 o'clock open price. So this is the 12 o'clock open price is about 10,971, and from here we were able to write the profit about 33 points. Okay, coming to the next slide, next trading session is on 20th December. Uh, the trading signal generated at 145, and it got hit our stop loss, so we were out with only 16 points. The next trading signal is on at 9:45 a.m. So this is where our open high candle, and we are going to enter short the market at 10 o'clock open price, and this is where we are going to write the profit. Today we made 32.9, on this day we made 32.9 points profit. And next trading session is on 24th December. On this day we shorted the market at 2, the trading signal generated at 2 o'clock here. So 215 is a shorting price, entry price, shorting price. 215 is a shorting price, and we were able to, so this is open high candle, and we were able to make profit of 30 points, 32 points. And again, yes, there was one more candle signal generated at 12:30, the open low candle. So here, the 12:30, so we entered at this, and our stop loss got hit. So though, you can, if you can observe here, we made one trade with a loss and other trade with a profit, but we were out with profit, minimal profit of 16 points. That's about 1,200 rupees. That is because of the risk reward ratio. Okay, it's 1:2. Going to the next day is 26th December. There was no trade, so here there is no open low, open high, and so no trade on this day. And here you can see open high candle crossing below, but RSI is above 60, so I'm not going to trade. And here also open equal to low, and it's crossing above the uh, magic line, but the RSI is above 70, so I'm not going to trade it. Okay. Okay, that's all. So if we see in a whole month, uh, we had 24 trading opportunities based on this strategy, and risk reward we are following is 1 is to 2, and number of wins would be 13. So there are total trading signals 24 and wins are 13 and losses are 11. So the winning percentage is about 54%. Okay, so the winning percentage is 54%. And see, any strategy which is any strategy is good if it is winning ratio is more than 40%. The 40 just 40% of winning percentage is enough to make money in the market when you have a, minimum risk reward of 1 is to 2. Okay, so currently in this month, sorry, in December month it gave 54% win percentage, and these are actual traded by me. The strategy was traded by me in December. That's why I was able to capture the charts and keep it ready, so that I made some good amount of money. So the total profit per month was around 227 points. That is about 17,000 rupees. So after all deductions like brokerage, taxes, and everything, the profit might reduce to approximately 12,000 rupees. So around 5,000 rupees you are giving for the brokerage, taxes, and everything for 24 trades. Remember, 24 trades. So I'm going to this 5,000 is for uh, cost of running the business. So if you treat the trading as a business, so any business you need to run your business, you need to spend your money. So I'm spending 5,000 rupees for 24 trades to make a profit of actual profit of 12,000 rupees. So if you consider 1.5 lakhs as your total amount, the total capital, uh, in a month, this month on December future month, we made about 8% profit. Okay, so anybody who is expecting 100% returns in a month or 100% return in a week, definitely the market will make them lose 100% of their capital. Okay, so always any rich guys, any businessmen, they all target 3 to 5% per month. So because I've spoken to many traders, the pro traders, um, and also I've spoken to my guru like Indrajit, and some other trading gurus. So they all say that always concentrate on your minimizing your losses. Okay, then obviously you'll be in the right path. So that means you have to expect from the market on a consistent basis. You need to expect from market like 3 to 5% per month. So imagine you are making 3% every month consistently. On an year basis, you'll be making around 36% returns. Okay, so that's what you have to expect, not like you have to expect, not like 50% in a week or 50% in a month. So in that case, you are going to lose the money. So personally, I have experienced long back on this. I used to buy a option or buy a futures, thinking that it will double in a 3 months or 2 months. So that's not a way to make the money. Okay, that's all for the strategy, and we have seen the performance of the strategy for a whole month, and this is a good strategy for me. Actually, it's suiting my trading style. And okay, I did not explain you about the magic line and the parameters and settings for a magic line. And you can connect me through WhatsApp at 6362220873. And to learn more about the strategy and to understand what is the RSI settings for the strategy and how to analyze with the RSI, and to understand what is a magic line and parameters and settings. And if you need the PowerPoint of this the presentation, the PowerPoint, I can send you the PowerPoint. Before contacting me, please share this video. If you like the video, please share this video and subscribe to my YouTube channel. I will be coming up with more and more strategies going forward. um, that's all. Thank you. Happy trading.